Gentlemen, thank you so much for your time. Tim, can I begin with you? Because a cut was largely priced in, according to most economists. We weren't expecting much action on the rand, yet the rand has weakened significantly after that decision. What went wrong?
I don't think it's so much a case of anything going wrong. It's just the US GDP number came out pretty much while the MPC was on, and it was ahead of what it was 2.2% higher than expected. So that would probably may feed through to higher interest rate expectations in the US, which is why I think we saw a slight weakening in the rand.
Okay, so not so much of what was said here. Henry, if we just come to you, more global factors driving what we're seeing in the markets as usual. But what did you make of the MPC statement delivered by the SARB and the tone of Lesotho Kganyago today?
Right, well, thanks for having me on, firstly. So we're happy with the direction. But we've been saying that they should be cutting and actually cutting aggressively. So we're happy that they've cut by 25 basis points. 50, in our opinion, would have been also, it could have been warranted.
Except they didn't even discuss 50, the governor said.
Yes, they didn't. It didn't come up in the meeting, apparently. I find that difficult to believe, given how good a window of opportunity we've got here to really get things going and start cutting aggressively. I mean, global growth is strong. There's minimal upside risk to our inflation trajectory going out, at least towards the end of the year. So really, this is a good window. The rand has remained strong. And remember, last year, there were a number of risks that the MPC thought, let's just hold back at this point. So the NEC conference, there was a favorable outcome there. The possibility of a full downgrade to junk. So if Moody's had gone and pulled the trigger, which they haven't. So now, really, all that's are green.
And I mean, Tim, just to bring you in here, I mean, do you think that the Reserve Bank made the right call? I mean, 25 basis points is what we got, but it was so tight. It was 4-3. Did they make the right call by 25 basis points? And did they make the right call by also not even discussing a 50 basis point cut?
Well, like you point out, the 43 margin was a bit of a tight one. In terms of, personally, I think that it's sort of less of an issue of how much they cut and vis-a-vis when they could have cut. So, for example, outside of the political issues that we had earlier in the year and late last year, they could have gotten away probably with a cut then. And then at the same time, you just have this issue of sort of sensitivity towards capital flows and interest rate differentials. Although the rand is quite stable, the one thing that I suppose that was notable was that when we tested the 1150 level, we didn't break below it. I'd been expecting to see sort of an 1125. So, that sort of indicates potential weakness going forward, or potential downside risks, in the future, should we have negative developments.
And the bank also said that its view is that the rand is looking a bit overvalued at this stage, that they don't really see much upside for further strengthening. But let's actually hear from the Reserve Bank governor. I mean, he spoke earlier today about the impact of the inflation outlook, as well as the expected increase in VAT that takes place, in the next couple of days. Let's take a look.
The MPC noted the general improvement in the inflation outcomes and the lower inflation expectations. Although the bottom of the inflation cycle has likely been reached, the trajectory of headline inflation is forecast to remain within the target range, with core inflation expected to remain below 5% for most of the forecast period. To the extent that inflation expectations are adaptive, there may be further downward adjustments in these expectations in the coming quarters. As mentioned earlier, the MPC would prefer to see inflation expectations anchored closer to the midpoint of the target band. In considering the impact of the VAT increase, the approach of the MPC is to look through the first round effects of this increase and focus on the second round effects, which are expected to be relatively small. In any event, the policy horizon of the committee extends beyond the period during which the first round effects have an impact. The committee assesses the risks to the inflation forecast to be more or less evenly balanced.
So evenly balanced risk to the inflation forecast there, Harry. I mean, I must ask you, so Tim has alluded to the US GDP figures that did come out a little earlier, much stronger than expected, and this is why we're seeing the rand weaken. Does this explain the kind of moves that we're seeing on the JSE? Because everything is in the red, and particularly your SA Inc. stocks like your banks and financials, a lot of bleeding going on there.
So not entirely. So firstly, yesterday we've seen broad-based dollar strength because of that really good set of data out of the US. So that explains the FX move. In the equity space, you've seen quite a dramatic upward revision in risk premia, and basically the market said since about the 5th of Feb, hold on, we need to reprice fairly large risks here. A possible global trade war, and then B, the possibility that the Fed's making a policy mistake here. So on the latter, we probably wouldn't be too worried. The prospect of a global trade war is where things, really could break down. So we don't think that this is the start of broadly an equity bear market at this point. We still think global growth fundamentals are strong enough so that we get the sideways trade, really a trader's market for a month or two, and then we see the next leg higher. And I think that GDP print out of the US kind of supports that view. But yeah, so a lot of that, what we're calling cross-asset confusion at the moment, is really now the market trying to digest all of these risks that were perhaps underpriced prior to Feb.
And of course, it doesn't help matters the fact that it's a short week due to the holidays all over. I do understand most exchanges will be closed for the Easter holidays. I mean, Tim, we're talking about growth here. The Reserve Bank not as optimistic as other houses about the improvement for growth forecasts here in South Africa in 2018. I mean, what did you make of their modest forecast compared to the like of, S&P and the Treasury for growth?
I suppose due to the what can I put it there? Due to the residual effects of government policy during the Zuma era and how business views that, I suppose growth is probably likely to be more on the conservative side than for there to be all of a sudden a huge increase in capital deployment and job creation. So on that side, I figured the Reserve Bank's forecasts are more or less in line. Inflation is fairly benign. I suppose we only really start to have problems if the rand should go above 12.25 or maybe 65 for some unforeseen reason. But I don't see a move as extreme as 12.65 in the short to medium term.
Well, you know what?
So we'll probably stay below about 12ish.
Well, let's hope we stay below 12. I mean, I've been counting on some of the forecasts of around 10.50 to the dollar that we've been hearing from traders. But Tim, let's just hold that now, just to bring sort of more clarity on exactly what a cut means for the South African consumer. Let's take a look.
Take a luxury car with a price tag of 1 million rand. If you add the increase in VAT from 14 to 15% that comes in on April the 1st, you get 1,010,000 rand. At the old prime interest rate of 10.25%, you'll pay back 285,376 rand in interest over the next 5 years. This cut of 25 basis points will bring down interest rate payments over 5 years to 277,900 rand, a saving of just over 7,000 rand.
So the interest rate cut definitely easing some pressures from that VAT hike that is expected in the next couple of days. I mean, Harry, on to VAT, or to continue with VAT, expected to be a once-off, really. So I'm not too concerned about the risks to the inflation outlook there.
True, yes. As we expected, they are likely just to look through that. It is a single impulse to inflation, as you're alluding to. And therefore, I think his statement in the address on VAT was I think, spot on. So it hasn't altered their outlook, although I still think that, the tone of the MPC is possibly still a little bit too hawkish for where we are in the cycle. The market is now moving in line, I think, with that view. The market, given even 4 or 5 weeks ago, was hardly expecting a cut this year. Now the market's pricing for possibly 2 cuts, which is our baseline. So the market's slowly, with higher conviction, actually saying this is a real cycle. Borrowing rates are going lower, inflation is relatively low, and that's not going to derail that thesis.
No, for sure. But of course, the governor, not calling this the beginning of a rate cutting cycle just yet. In fact, the SARB saying that they're still expecting another interest rate increase under their model, 1 more for this year instead of 2, which is a bit of an improvement. But I mean, Tim, just to come to you, I got the sense from the governor that, although this Ramaphoria has set the markets alight and, got the rand at levels we haven't seen in a long time, there's a caution from the SARB that they're wanting business to translate this increased optimism into tangible investments on the ground that will create jobs, that will grow the economy. I mean, in this new dawn era, are you seeing business putting their money where their mouth is?
So far to date, I haven't seen any radical changes in terms of corporate investment, but it's still early days yet, and I think most of the enthusiasm has been shown in on the currency. One of the things that is quite interesting is how the rand has been a little bit somewhat indifferent to some of the start of the land seizures. But what's also kind of interesting is that if you compare this to the last time the US was in a rate hiking cycle or was projected to be hiking rates, we are, have a bias of either being neutral to cutting when forward-looking the US is looking to hike rates. So that's quite interesting because the wider that gap grows, the greater potential we have in terms of potential capital flight and whenever the periods of instability in terms of foreign investor perception of what's going on in South Africa. So that bit is interesting. But in terms of the Ramaphoria and whatnot, I suppose there are 2 competing forces. Is one that you have increased confidence potentially in South Africa going forward, but one of the other things that's sort of becoming increasingly prevalent is technology. And as people use more and more technology, there's less and less need to create jobs, which we didn't have, call it 5 or 10 years ago. So that's also another factor.
Yeah. Thanks, Tim. Harry, just some short parting words from your front, particularly in shaping your investments in this scenario, the outlook that the SARB has projected going forward.
Right, so in the equity space, we are still buyers of weakness in your SA Inc., so rand revenue generators. It's been a good play up until this recent market volatility. We think at this point you've got a better entry point now to reload length in those names. And in the fixed income space, we still like duration. So we are expecting yields across the curve to be falling this year, reflecting a lower short-term borrowing costs, but to a greater extent lower risk now. So risk priced into those assets further along the curve. And I think if globally we get this heightened risk aversion sort of dissipating through into Q2, then that will play very nicely into that outlook.
Of course, that depends on the trade war and whether it happens.
Exactly.
But Harry, we'll leave it there. Thanks so much for your time. That was Harry Plumstead, who is an economist and investment strategist at Avior Capital Markets, and Nhamo, founder of Ironhead Trading.